here with my friend and partner Saket Jain from Migrate to Wealth, and we're trying to get a short, efficient, quick webinar about how we can invest in real estate properties with our retirement plans. As you know, there is a big discussion right now with the bank failures left and right, and people are asking questions about what should they do with their money and, with the cash they have in retirement plans. And this is one option that very few people know about, where you can use your retirement funds in whatever account that is with your custodian, with your company, to transform that into a self-directed account and invest that cash in a real estate property that can bring you potentially more passive income and cash flow. So I want to briefly discuss with Saket the options that we have here and let everybody know that that's an option, a real option for investments. How are you, Saket?
All right, dude. Thank you. Thank you, Tudor, for having me here, man. It's always amazed. We're using two different cameras, man. We're like 20-year-olds back now. You're teaching me how to stream. There you go, man. But yeah, to your point, I think it's an important topic because a lot of wealth is stuck in retirement funds, and most people don't know that they can use the retirement funds, if structured properly, to buy assets that are not necessarily your stocks and bonds and mutual funds, right? You can buy real estate, you can buy multifamily, you can buy single family, you can buy gold, you can buy silver. You can use that to fuel your growth in these assets as well, and probably create a little bit more diversification for yourself.
Right. What would be something that an investor could do as a first step to start this journey with their retirement plan?
Yeah, really, I think really the biggest thing is you got to have a retirement account, right? So retirement account comes in different ways. You have a 401k, you have your IRAs, you have your pension accounts, right? Depending upon who you are, what you have a business or you're an employee, you probably have one of the others, one of these things, right?
Right.
And if you don't, of course, that'll be a starting point. You want to make sure that you have one established. And the stuff that we're talking about, if your company has a 401k plan and you're investing in that company, in that 401k plan, you're contributing to it, that's the only account you can't use, right? Because most companies do not allow, their custodians will not allow investments in non-traditional assets. It's kind of funny when we call it non-traditional. Real estate and real assets are actually more traditional than stocks.
Right.
They've been here for thousands of years, right? Stock market is relatively new compared to that. But regardless, most of the 401ks, company 401ks, will not allow you to do that. That's really the stuff that we need to figure out. But if you have an old 401k, let's say you changed the employment and you have an old 401k lying around somewhere that you have forgotten to roll over into a new company, you're actually in luck, because you can convert that into something that you can invest using something that you roll into a self-directed IRA, right? And we'll go into detail more as the webinar continues, but that's really the biggest requirement for you to take use of it, is that you have to have an account and there's got to be money in there, right?
Right.
That's the starting point.
And it's funny you said that if you have a company, your employer, whatever that is, that you have an account with, you put money aside each paycheck into your retirement plan. Most, if not all of those companies, only restrict your investments to the stock market, correct?
Yep.
Because they want to feed 100%. The Wall Street, basically. It's a
because they're
a big scheme that government created to fuel that Wall Street.
Yeah, I mean, it's kind of funny, right? So if you actually, not funny, interesting. If you look back how the 401ks got started, they really got started after in the 1970s, right? Late 1970s. I think 78 or 79 is when 401ks got started. And really the reason, until then, they were all pensions, right? Company pension plans. Every company was supposed to have a pension plan, but they quickly realized that with the way inflation is going, you're not going to be able to feed anybody with that pension plan. So they wanted they took it, and we're talking about controversial topics here. So they really took the shield of 401k and saying, we're going to give the power back to you, and you go create your own retirement plan, so per se. But we're going to now use the Wall Street as the only means for you to do that, right?
Right.
However, and it's a funny thing is, most of the pension funds, they don't invest in stock markets, right? So if you're working at the government facility, if you're a fireman, your pension is not getting invested into stock market. It's actually coming into real estate, multifamily. It's coming in assets that are outside of the stock market, but yet the same companies are telling you that they have a 401k plan, and stock market is the safest asset class, right?
Right.
So it's just kind of like always two contradictory approaches. They're not going to use the stock market for themselves. I was actually talking to a financial advisor yesterday on my podcast. The person basically said that, and I don't think they realized that they have created their entire wealth in real estate, but they're a financial advisor who can only talk about stock market, right? It's kind of true, but we're digressing. So
Yeah.
bring us
So
back to
let's see. For example, if everybody has probably a 401k with their employer, right? So either an IRA or 401k. How would someone can transfer the money from that account to something self-directed where they have an option to invest in real estate?
So let's clarify the word self-directed. So a lot of companies are now saying that their 401k plans are self-directed. So that's not the self-directed we're talking about. We're talking about the self-directed IRA or self-directed 401k, which allows you to invest into alternative assets, right? Which is your real estate, your gold, your silver, think crypto, right? All these are assets which are non-stock market based. So you need to make sure that you're looking at a provider which helps you open up an account, a self-directed IRA account that can invest in these asset classes. That's the first step. Once you find one that you like, and you have to really do your due diligence, and we have several in our ecosystem that we can share with your listeners, Tudor and mine. But once you pick that once you pick that provider of a self-directed IRA funds, you will work with them to open one account because you'll need that. And once you have that, that's when the rollover process starts. So now you need to move money from your old 401k. You cannot roll over the money from your current employer's 401k. They won't allow it. Most of them don't. There may be some exceptions, but most of them will not. So you have to go back to your IRA, or you have to go to your old 401k plan, and you can now roll that money just like you would roll over into another custodian, like from Fidelity to Schwab, for example. It'll be the same exact process. Now you'll roll from Fidelity or Schwab or something like that to a third party custodian. Once the money is available to the new custodian, the self-directed IRA custodian, from there, you are now working with them to go invest in deals that are outside of stock market.
Right. So this is an interesting concept here that I want to clarify. The name custodian and provider, right, for those self-directed accounts. That means that these companies, right, they're not holding your money in a little box there, right? It's your money, but they have basically their guarantor that your deals are regulated properly by the IRS. They keep, the rules in place. You can use their money for your own sake or your own personal expenses. So it's basically a custodian that keeps that account in check, correct?
Yeah, it's really what we want to make sure is that there's so many prohibited transactions. For example, if you were to buy your own rental property and you were going to manage it yourself, and you're going to rehab yourself and everything else, it's considered sweat equity. And IRS doesn't allow you to use your retirement funds to invest in those properties, right? It's prohibited transaction.
Right.
If you didn't have a custodian as a line of defense between you and your funds, most people may not know that, right? So a custodian is going to help you understand what you can and cannot do. Now, they're never going to tell you whether an investment is good for you or not. That's not their role, right? but they are going to tell you what you may not be able to do. That's really where their role is. And they'll help you understand the tax laws. They'll help if the custodian is right. Now, not every custodian is created equally, but if you pick the right custodian, that's really what the job is.
I see. Very nice. So this is very important for investors to realize that they have an option with a lot of money that are sitting in their cash accounts in their retirement plan. And the notion of a retirement plan, right, is that we put money in there in hope that when we get to retire at 65, we're going to have some money to withdraw and live, longer.
Right.
But we don't realize that that money needs to get invested the whole life while you're putting money in there. And if you have limited options of investments in that account, you're not taking advantage fully of your potential of compounding interest. So
Yeah.
I want to be very clear for investors that this is a clear option for them to invest in things like real estate and other assets that are probably more productive in the current situation in the market and economy than just stock market. Any advice of how and where we can find custodians that can do that?
Yeah, I think this is, if you just basically go on Google and search for self-directed IRA custodians, you'll find tons of them, right? So it's not like they don't exist. It's just like you probably have never heard of it or you've never searched for them, right?
Yeah.
Now we have worked with a few ourselves too. I know you and I have in our ecosystem. They're the same names that keep popping up. That does not mean they're the only ones, right? There's Equity Trust, there's IRA Club, there's Kingdom Trust, there's Rocket Dollar. There's a lot. The list is on and on and on, right? When I first knew about it, I really didn't know where to even look for it. So, but once I got to develop that ecosystem, there's really tons of them. Now, not all custodians are created equally.
Right.
Right. What does that really mean? That really means you have to understand the custodian that's going to work with you, that matches your style, right? There's fees involved. There's some of them will charge you on asset management fee, asset under management fee, AUM, which is what the financial advisor is managing on, charging you on. Some of them will have a flat fee. Some of them have no exit fee. Some of them have exit fee. So it's a decision that you'll have to make. There's really no simple template to tell you, say, go here and there's a checklist available to do that, because you really have to understand that you have to do your own due diligence, right?
Right.
And of course, if you happen to run into something that you have questions for, Pink Tutor and we can help you figure out if you have looked through the two custodians the same way, right? If there are hidden fees, if there are things that you need to pay attention to. We've worked with several now, so we kind of know what to look for in a custodian. But it's really, at the end of it, once you pick a custodian, it's a simple path. Picking the custodian is probably the hardest path after you making a decision on what you want to invest in. Now, there are two ways to go about it. You can establish a custodian account, a self-directed IRA account, and then find the investment, which is the right way to do it. So you're not running out of time when you pick the right investment. The other option is, of course, to find an investment. Let's say Tudor and I have a syndication deal. You like that deal. Now you want to move forward. Now you don't have the money in cash somewhere else, but you have money sitting in your IRA, which you like to deploy in some other purpose, right? Then you will go initiate the self-directed IRA process. Then the funds will get transferred. That is usually about a 3 to 4 week process, some sooner, some later.
Right. So this is an important point here that people need to know when you choose to do that with a self-directed account and invest in real estate, is that you choose the real estate investment or deal you want to invest in.
Correct.
They don't. They just take orders from you and say, please transfer this amount of money into this deal, into this account for me as an investor. And they will do the paperwork, they'll do the wire transfer, and make sure the transaction is legal and squared off. So this is very important. Correct.
Yeah, so I think unlike a financial advisor where they'll say, I'm allowed to only sell Vanguard index fund or Fidelity index fund or something else, here, the option is open to you. You can bring any deal to them as long as the paperwork checks out, they're not going to tell you if the deal is good or bad. That's not what their role is. They're not financial advisors.
Yeah.
But they're going to ask you, hey, can you send us all the documentation that your sponsor is giving you so we can review and make sure everything checks out, right?
Yeah.
They're looking at a compliance check. They're not looking at the investment validity or the due diligence on that. If you're looking for that, you're not going to find with them, right? You're going to be disappointed. No custodian is going to provide that.
Yes.
Because that is really, at this point, you're taking the decision-making power in your own hands, which is why
Correct.
Guru and I exist, right? That's the only reason why we're existing, because we want to make sure we're putting the power back in your hands.
Yes.
Through education, through your network, through your ecosystem, through listening to podcasts, through listening to webinars, that you understand how to analyze your deal. As Warren Buffett said, only invest in things that you understand, right?
Right.
So far, you've lived in a world where you don't understand stock market, but you invested in it. We're changing the paradigm by telling you, we're here to teach you how to look at deals.
Yeah.
No deal is perfect, right? Every deal has issues. Every deal has pros and cons. That's what we're here to now to share with you our understanding, how we're looking at it. And if the paths align, if the investment makes sense, we'll bring you in, right?
Yeah.
But there's no third party involved telling you what to do and what not to do.
Absolutely. And I think another point important for investors is to know that by actually investing in real estate with a retirement plan account provides actually another layer of protection for them to be assured that the transaction is made in order, legal, with no other things that you can miss as a simple investor.
Right.
If there was, your simple money from your personal account. So this is another layer of protection, basically, for people to assure they're doing the right thing.
Definitely. I mean, the process, once you know, like anything in life, right? Once you know how to do it, it's very easy. At the onset, it may seem very overwhelming, but think of it as you're creating another IRA, a type of an IRA that has a little bit more flexibility, but it's essentially an IRA account, and you're rolling your money from one IRA to another IRA.
Yeah.
That's how abstractly you should think about it. And the self-directed IRA custodian, if you pick the right one, they're going to hold your hand, right?
Exactly.
But that does not mean the more expensive custodian is better or worse. There's really both available, right?
Yeah, it's
There's
like
really...
choosing a bank for your money, right?
Correct.
It doesn't really matter, where you go. There's some bigger banks, some smaller banks.
Right. Well, I guess
they all can
nowadays
go bankrupt at some point, but that's another story.
Right. I think at this point it may matter. You want to pick a bigger bank, so
exactly.
This may matter now.
That's a good lesson.
What happened last week. But you're right. I think it's really a commodity, right? SD IRA custodians are self-directed IRA, which is SD IRA. S as in Sam David IRA. It's really is a commodity. You don't need to overpay them, but the more the better ones will charge you a little bit more than the cheapest one.
Yeah.
But that does not mean you need to pay thousands of dollars in fees.
Right. Perfect. That's great. I think we covered pretty much the essential and basic information here for self-directed retirement plans, investing in real estate. And anything else that you're thinking about an investor should know about this topic?
Actually one few things that an investor needs to be aware of, which is again, a lot of these syndicators forget to mention. If you're investing through your self-directed IRA in an asset that has a leverage on it, which essentially means it has a debt on it, right? You're taking a debt on it. You sometimes get hit with something called as UBIT, which is unrelated business income tax, which is essentially IRS. If you think about this, the context there is the IRS is saying you only at 100K, the leverage that you added in the retirement account, it didn't exist. So you need to pay income on, you need to pay taxes on that income, right? Because you didn't contribute to it. That's just IRS's way of making sure that you're not taking advantage of the retirement accounts, right? Whether it's right or wrong, that's debatable, but that's what exists right now. So you need to make sure you work with your CPA that the depreciation you're getting, most people think that the IRA account holders don't need depreciation. So work with your CPA to make sure that you understand you're not going to buy a real estate without a leverage. So there's a very high likelihood if you're investing in a multifamily or a self-storage or a mobile home park or any of that nature which has debt on it, you're going to get hit with UBIT. That how to use that depreciation from the property to offset that. Now there's a completely different way of avoiding it, which is if you're able to establish your own solo 401k account. Solo 401k accounts are exempted from UBIT. There's no UBIT on those, right? So there's ways to work around it, but it gets a little bit more complicated than establishing a simple SD IRA, right? So that's the first step. Get an understanding on that. Get work with a custodian, and then once you cross that and you are ready to invest, we can look at the UBIT. And if there's no way to avoid the UBIT for you, the CPA tells you can't, we have other ways around it to make sure that we can move that money into solo 401k account plan. And that's through that solo 401k, you are able to now invest outside of the UBIT. There's no UBIT on solo 401ks.
Right, right. Yeah, it's these are flavors of the same topic, basically, between the IRA and the 401ks. But the main idea and the principle is that you can do that with each one of them. And
I think to your bank analogy, Tudor, right? To your bank analogy, it's a difference between a CD account versus a savings account, right?
Right.
Both of them are serving the same thing. It's just that one gives you a different return than the other. And that's exactly what we're talking about. Solo 401k and SDI are exactly the same account. One gives you a little bit more different than the other, and one is easier to establish than the other. So you just have to understand the nuances. But on the abstract level, they're pretty much the same account in terms of how to invest in real estate or something else.
That's great. All right. So for whoever is watching us, we're here for you to ask questions and maybe hold your hand through the process. Saket has a great podcast, Migrate to Wealth, that I highly recommend, with tons of information.
Actually, you know what, Tudor? I'll interject. Shameless plug. Episode number 26. It's about a 30-40 minute episode, maybe shorter. I can't remember now. Maybe 15-minute episode, where we go deeper into how to use your IRA to invest in real assets, right? So I invite you to guys look at it. It's Migrate to Wealth. It's available on Spotify, Apple, wherever you wanna. It's on all platforms except Google. Google Podcasts. It's not there yet. We're gonna get there too.
Yeah, absolutely. And also, you can reach me at my website, stellarmultifamily.com, or you can watch those recordings on my YouTube channel also. So please feel free to contact us with whatever questions you have to move in the process. Thank you very much.
Thank you all for joining. Appreciate it. And Tudor, this is my first Instagram Live, man. You taught me something that I didn't know before.
That's good.
Thank you. All right.